Good evening, everyone. Welcome to our analysis on indirect tax proposals of Union Budget 2019-20. This budget indeed was historic in many ways. The NDA government returned with full majority. At the same point of time, the budget was being presented by a first woman finance minister. The economy had been in doldrums. Globally, there are trade issues between largest of the economies like US and China. So with all this in backdrop, there were a lot of expectations from the union budget. The key question is whether the finance minister has stood up to those expectations. In our view, yes. This is what we feel from the various indirect tax proposals made in this budget. These proposals not only try to address the perennial problems of the past, they want to make life easier in the present as well, and wants to put our country back to the growth trajectory in the times to come. Now, coming to the presentation, we'll be discussing a snapshot of the budget. The budget has a clear focus agenda. It has sought to take in various robust measures and has a very clear direction in which the government wants to take the country to. On the custom side, there are certain trade facilitation measures which have been taken, and the compliances have been sought to be strengthened. On the rate side, number of rates of custom duty on products have been changed to incentivize Make in India. There have been various amendments in the GST laws to implement GST Council's decisions. There have been various retrospective exemptions brought in under the erstwhile tax laws to take care of the past disputes. And lastly, there is an attempt to redeem our past by introduction of a legacy dispute amnesty scheme. We'll be discussing each of these aspects in greater detail in the coming slides. Firstly, coming to the legislative amendments on the custom side. The provisions have been introduced for verification of identity of importer-exporter and the compliance management to avoid any frauds or misuse of export incentives. The jurisdiction of custom officers have been extended to arrest tax evaders, not only within India, but outside India as well. Stringent penal provisions and prosecution provisions have been introduced for fraudulent availment of export incentives, and non-verification would lead to suspension of import-export clearance, licenses, denial of refunds, etc. Another important change which has been sought to be brought in is that the government can impose countervailing duty in case of a circumvention, or in other words, where free trade agreements or benefits have been sought to be availed by changing the description or composition of articles, bringing in unassembled forms, changing of country of origin, etc. These set of amendments clearly indicate that the government's emphasis is full compliance by the taxpayers and have a strict approach in case of any misuse. Coming to the rate changes. Before coming to the specific rate changes, many of these changes are likely to have very far-reaching implications. In general, The rate changes have been made in two baskets. BCD rates have been sought to be increased on various products like automobile parts, CBU of vehicles, electronic equipments, paper, construction materials, etc. etc. What is the purpose of this? The purpose is that all these products can be very well made in India. So the government wants to incentivize domestic value addition and boost Make in India scheme. So by increasing the BCD rates on these products, whenever someone imports these products in India, they become expensive. And to that extent, the Indian manufacturers will have a price advantage. Another set of custom rate changes which have been done is that BCD exemption has been provided to various raw materials, capital goods, which in turn is used for manufacturing purposes in India so that the cost of manufacturing reduces. Apart from that, various products which are actually not manufactured in India, like specified defense equipment, medical devices, nuclear fuel, specified nuclear energy projects, etc., those have also been exempted from BCD. Coming to goods and services tax, important to note that goods and service tax changes are decided by GST Council, where both central government and state government are represented. To that extent, the central government does not have power to make any changes in the GST law. In today's union budget, the government has sought to make various changes in the GST laws, but those were only to enable the amendments which were proposed by GST Council in its last meeting. The key changes are constitution of a National Appellate Authority for advanced ruling to take care of cases where there are conflicting rulings in case of the same taxpayer, applicability of interest where there is a delay in payment of tax by the taxpayer, and such interest will apply only on net tax liability, that is, after reducing the available credit amount. The government wants to treat the various cash ledgers, be it CGST, SGST, etc., at par, and so there will be free transfer of amount from one cash ledger to another. Certain procedural changes have also been sought to be made. Aadhaar-based verification, digital payments to be a prescribed mode of payment by the customers, new return scheme, etc. Now, coming to the redemption of the past, firstly, government has sought to bring in various retrospective amendments where disputes were going on. These retrospective exemptions have been brought in on the service tax front. The first exemption is that when the state government provides a liquor license, there was a liability to pay service tax under reverse charge. This liability arose from April 2016. The government has retrospectively exempted this service. The second service is education by IIMs. So the government has granted exemption for last 13 years, July 2003 to March 2016. Lastly, long-term lease, where an upfront amount is being paid for development of infrastructure for financial business. This service has also been exempted for the period October 2013 to June 2017. Important to note that the statutory provisions relating to these retrospective exemptions also provide for interest, where the taxpayer has paid tax on these accounts in the past. Lastly, and for sure not the least, In our view, this is the most pragmatic step the union budget has taken. So the budget has brought in Sabka Vishwas Legacy Dispute Resolution Scheme 2019. By this scheme, an opportunity is given to the taxpayers to close all the old cases of excise, service tax, various cesses, etc., where the litigations have been taken place under central indirect tax litigations. In the past also, the country has seen various dispute resolution schemes, but in all those schemes, the tax, interest, etc. was payable, and generally the waiver was for penalty only. But in this scheme, the government has taken a pragmatic approach. The salient features of this scheme are that the scheme covers the entire spectrum of disputes starting from tax arrears. Tax arrears have been defined as where the taxes have been declared in the returns but not paid, voluntary disclosure, inquiry or audit, show cause notices, and appeals before various appellate forums, courts, etc., till Supreme Court. The only precondition is that these litigations should be pending as on June 30th, 2019. The most favorable aspect of this scheme is that if the taxpayer opts for this, it is only required to pay tax in the range of 30 to 60% of the tax involved. In other words, the taxpayer is not required even to pay 100% of the tax involved, and the balance amount is given as a benefit from the government side. So the benefit does not end here. There is a complete relief from payment of interest and penalty. Yes, the scheme sounds too good to be true, but that's what the fine print says. So if a taxpayer has a litigation, it is totally absolved from the entire interest and penalty liabilities. It is also absolved for the tax payable in such litigation. So it gives an opportunity for the department to close these pending litigations. At same point of time, the taxpayers can also review their litigations as to which are the litigations having meager amounts. Are there any cases where the taxpayers stand on a weaker footing? Are there any cases which are likely to take a lot of time for resolution? The taxpayers can opt for this. Yes, the fine print indeed will come once the finance bill becomes an act and the necessary rules and procedures are being issued. So what is the amount of relief which is granted? So the table in front of you indicates. So the first situation is the appeals. Appeals can be before commission appeal, tribunal, courts, etc. If tax dues are 50 lakhs or less, then the relief is 70%, otherwise 50%. The same percentages hold for the show cause notices as well as the issues which are under inquiry or investigation. The fourth row talks about voluntary disclosure. So if the taxpayer himself has chosen to disclose its liability, there is no relief. The entire amount paid by the taxpayer, that itself will be admitted. Lastly, if there are tax dues, and again the tax dues are defined as orders which are not appealed against, tax reported in returns but not paid, etc. There also the relief is 60% if the tax due is less than 50 lakhs. On the other hand, if the tax dues exceed 50 lakhs, the relief is restricted to 40%. With this, we come to the end of our session, and we hope that you find it useful. Thanks for watching this video.